Today, we will talk about custodian banks. A custodian bank is a financial institution that holds customers' securities for safekeeping to prevent them from being stolen or lost. The custodian may hold stocks, bonds, or other assets in electronic or physical form on behalf of its customers. Often, a custodian bank does more than provide asset protection. It can manage customers' accounts and transactions, manage the settlement of financial transactions, account for the status of assets, and ensure compliance with tax regulations. Since they are responsible for the safety of assets and securities worth hundreds of millions or even billions of dollars, custodians tend to be large and reputable firms, such as banks. Custodians can also be appointed to maintain control of the assets of a minor child or an incapacitated adult and manage them on their behalf. Most custodians offer related services such as account administration, transaction settlements, the collection and distribution of dividends and interest payments, tax support, and foreign exchange management. Custodian banks may also handle investment activities for customers, prepare the necessary tax filings related to investment activities, and their fees for their services depend on exactly what they provide and can be based on the value of assets held. The difference between custodian banks and traditional banks is their primary roles. Custodian banks are responsible for, above all, the safekeeping of financial assets belonging to individuals or institutions. Traditional banks are financial institutions with the primary role of taking and holding deposits for customers and extend loans to them. Traditional banks may also offer custody services and therefore function as a custodian bank as well. A custodian bank takes on the responsibility of safeguarding the financial assets of individuals and institutions. Mutual fund custodians are third-party institutions that protect the securities in which mutual funds invest. The mutual fund custodian also pays fund expenses related to share transactions and monitors the companies in which the fund invests to ensure the mutual fund companies are in compliance with U.S. Securities and Exchange Commission regulations. In cases where investment advisors are responsible for customer funds, the advisor must follow custody rules set forth by the SEC. Notices must be provided to customers when certain activities are conducted on their behalf, and regular account statements must also be provided to the customers. If an account beneficiary is a minor, a custodian is often required. Each account can have only one beneficiary and one custodian, a designated adult representative. The custodian remains in place until the beneficiary reaches adulthood. Other people can contribute to a minor's account, but they have no authority over how the funds are managed once they are deposited. Custodians today do more than maintain the security of assets. They also provide accounting and settlement services, such as managing dividends or interest that has been distributed to the account or managing stock splits. The custodian bank performs such actions in the client's name. Bank of New York Mellon, JPMorgan Chase, State Street, and Citigroup are among the largest custodian banks in the U.S. Some of the best-known custodian banks overseas include the Bank of China, Credit Suisse and UBS, Switzerland, Deutsche Bank, Germany, Barclays, England, and BNP Paribas, France. Custodian banks are important because the security services they offer are needed by both individuals and institutions. They can be a valuable assistance to holders of financial accounts and assets who don't want to play a role in the day-to-day management of their accounts, transactions, and other activities. Yes, a custodian can be an individual. Other types of firms, such as a law firm or an accounting firm, can be custodians, as well. Custodian banks play an important role in holding and protecting the financial assets owned by individuals and institutions. They perform related activities such as account administration, transaction settlements, the collection and distribution of dividends and fixed income interest payments, tax support, and foreign exchange management. Custodians can also be appointed to aid in the oversight and management of financial accounts held by minors and adults unable to care for their affairs due to age, illness, or physical debilitation. Here are 5 key takeaways. 1. A custodian bank holds financial assets for safekeeping to minimize the risk of theft or loss. 2. Investment advisors are required to arrange for a custodian for assets they manage for their clients. 3. These assets may be stored in physical or electronic form. 4. Custodian banks can also manage financial accounts, handle settlements, and deal with compliance and tax issues. 5. Custodian banks can serve as mutual fund custodians. Hope this would help. Thanks for watching.